Okay, ladies and gentlemen, Clueless 8 back again. And let me go ahead and some of the other charts. One of the things I forgot to mention on the previous video cast, as I was explaining the S&P 500 in detail and the day count specifically, that on a strong um, bull market that we've been undergoing and very few refuse to believe that we're in, even after all these years, which is part of my behavioral game theory thesis, that the majority are still uh, significantly underinvested, underperforming, and that includes institutional so-called smart money. One of my favorite saying is smart money shows its dumb face. And when we see the quarterly results, the monthly results, and the ROI, return on investment, and an overall return from the so-called smart money, it's absolutely pathetic. It's dismal. And no wonder the market keeps on trading, climbing a wall of worry, and this so-called smart money just keeps on chasing the market higher. And that's one of the primary reasons why we get these very quick pullbacks and and shorts cover. And most recently, we saw one of those as recently as the first week in August. We saw one in the middle of April, and I'm sorry, middle of August, and and you can see what happens. It's just no stopping, and it just picks up and runs. That's because the underinvested, underperforming hedge fund managers, and believe me, I know these things, or at least have experienced these things, where they rush in, they add alpha. That means returns, excess returns on their portfolios because they're performing, underperforming the broader indexes, whether it be the S&P 500, the Nasdaq Composite, the Russell, those primarily by let's say 5 to 700 basis points. That's about 5 to 7%, and that's a terrible number given the fact that they're managed money, and they are charging very large exorbitant fees to manage that money. They should at least match the market, if not beat the market. That's what it's all about. But they've been consistently underperforming and underinvested in the markets. Underperformance has been key, has been a pathetic trademark of the hedge fund community since all the way down to 2009. So they are vehemently opposed to market rises. All kinds of reasoning comes in why markets should crash 20% in one day, and all kinds of good stuff. We see that over and over and over again in the media. We all know that. So, saying all that, um, one of the key facets, trademarks of a strong bull market, whether it be an intermediate one, whether it be a short-term one or long one, is that it normally trades the 9-day moving average. In this particular case, this is a daily chart, and this green line is the 9-day moving average. So if you notice it, and this is where observations come in, this is how traders really should learn, how things work. It takes time, but observe. Look at how well the candles hug the 9-day moving average. Once you deviate a lot away from the 9 moving average, you tend to gravitate back or revert back to the mean, slip, as you see that, and then this being the 13, yeah, I believe 13 or 22 moving average. I'm sorry, 22 moving average, 22-day moving average, the blue line, and then and then you move forward. When you have this type of move where it moves below that, obviously we have a test of the 34 and the 50, which are much more powerful longer-term lines. Now keep in mind here that when you deviate quite a bit away from this orange line, which is the 34-day moving average, or the 50-day moving average, the red one, you tend to revert back to the mean. And that's pretty much what's going to happen. And it's going to happen, I believe, in September. So that's, I'm going to show you that on the other charts too, and you'll see how well it works. So the 9-day moving average is very important for shorter term traders because it shows a ongoing strong uptrend on a short term basis. On a slightly longer term basis, the 34 and the 50 act as magnets, and if you deviate, or what we call standard deviation, more than 2 or 3 away from the 34 moving average, you are going to come back and gravitate towards that magnet, and that's called resetting the indicators, pricking the bubble, resetting, selling the euphoria, or whatever you want to call it. Okay, so this is what happens. So at this point in time, as we clearly see all the time, that when we deviate away, in this particular case, this is as recently as let's say the July 30th. See that here. Let me just get my drawing tool out. Okay, July 30th. This was July 30th. Let's see. Mid July, let's say. And what happens? This is the 34. This is the 50. It comes back and it hard hits and goes and tests the 50, and that's when this particular rally starts at the beginning of August. Okay, same thing here. You deviate quite a bit away from the 34 and the 50. It gravitates back towards the mean, bounces up, and in this particular case, obviously, it crashes well below the 34 and the 50, and look what the ensuing rally is. Okay, so that's the pattern symmetry. Obviously, if this line broke, and I've shown this before, that's a complete trend change, and it's a different story. So same thing here. We deviated quite a bit away from the 34 and the 50, came down, crashed, tested, came down, touched the lower Bollingers, and then it took off. So here we have a lower Bollinger here, we have a mid Bollinger here. We're definitely cruising above the upper Bollinger. You can also call this a bull flag. To be honest with you, it's a very strong move, and bull flags can break up to the upside. So that's this is the NQ. This is the E mini Nasdaq 100 futures. So I'm just showing you. This is a bull flag, which most probably breaks up to the upside. But if it breaks down, you're going to come and test the mid Bollinger, the 34, the 50, the lower Bollinger, and the cycle starts. This is certainly overbought, no question about it. As you can see on the stochastics, the McClellan oscillator is also somewhat overbought at around 125. We can see here that these overbought levels tend to stay overbought for a little while before they reset themselves. So all these are going to reset. There's no question about that. It's a matter of time, and I believe it's going to happen sometime after the 8th of September, going towards the middle of September. And then we probably, who knows, we might end up having a strong September or a strong third quarter. My gut feeling tells me they're going to have a strong third quarter. So in other words, you have a sharp correction sometime between the 8th and the 20th of September, let's say, and then the last week in September and the last 10 days in September, they gang rush the market, pick up the bargains, and window dressing, all kinds of stuff that happens, and I've mentioned and explained this very detailed in my prior video cast, and you're going to have a strong finish to the third quarter. And I think that's what's going to play out, because the quarter's been very strong so far. August was very strong, ended it very strong. September most likely will be strong, and if that's the case, we have October, November, and December to deal with, and of course, these could be mild quarters, or maybe add a few more points to the overall return on the market, which I believe this year should tag somewhere along the 7 to 8% range, given that we are up, about 3 to 4% overall in the market right now from the beginning of the year. That's a reasonable number to shoot for. So let's take a quick look at the at the Russell 2000 futures, the TF. I've been very accurate with this, and I'll stick to what I think is going to happen. Let me move all these lines here. I only have a minute to cover this. Very simply, the upper end of the Bollinger is around 1185. So if you want to pull up the RUT, which people can relate to more, actually RUT actually shows different. Let me just look at the TF. The TF is up about 430 right now, 4.30 after hours on Monday night, and the RUT closed at 1174. So bottom line is that we are looking at roughly about 1185 or so on the Russell futures. So we are looking at roughly about 1180 or so that I think we're going to top out at short term on the Russell 2000. So we still have about 6 points. So this is pretty clear. Hugging the 9, we have the 50, we have the 34. Quite a few deviation away from this, so it needs to reset. Again, if the 34 crosses over the 50, all hell will break loose, and this will take out new highs. On a longer term chart, it looks like the Russell 2000 will make a new high. Okay, that's it for now on these